Yeah, I'm looking at the recording, and the recording was giving me the indication that we had this. Obviously, I don't look at the chat while I'm talking. Let's start that over. Sorry about that, folks. All right, I'm seeing the same indication. Let me confirm first. Do we have volume? Okay, that's good. Let me see one other. Okay, all right, so checking out real quickly. So we've got the overnight slide that had been developing has extended. It's going to be really unlikely or difficult at least, to recover the Globex Opens first hour, which if we don't by 9:45 will trigger a Globex flip. That tends to be bearish for the morning. We had a similar situation yesterday. The bearish Globex flip was productive, triggered bias down. The bias down target was met, and then got ambushed by favorable headlines that are finally retracing. Finally correcting by at least 61.8%. That's something I described during the market tour. The planner session had yet to develop, which is a normal thing to accompany, if not follow, headline reactions, and that is to, at some point, retrace at least 61.8%. But until just now, at the low, we had not come close. So this would satisfy that. This would qualify as finally retracing 61.8 so the morning could get back to rallying. Question is, will it get back to rallying enough to recover the Globex first hour to avoid a bearish setup? If it doesn't, then we'll just be flat to lower in this negative area at a deficit, or resuming the decline, one or the other. There is a proxy gap. The proxy for the gap from yesterday's cash session close, 39.95, to today's opening print. I don't know where that's going to be, but let's say it's right around here. That'll that tells us with a 61.8%, and I'm just gaming this out. We don't know where the open's going to be, but let's say that's it at 74.50. 61.8 retracement back to yesterday's cash session close is a proxy for that, and it very often is going to be influential. If it's even tested, this range can be tested easily. Getting through the 61.8 retracement, more difficult. But these are the paths that I would consider post-open. Here, this was already being triggered pre-open, but if we just come out of the open above 76, that gets a benefit of the doubt. Not entirely reliable, but in the first several minutes, but that's a pretty big line in the sand to maintain a recovery of immediately to get us up to 82, 85. Otherwise, a little post-open dip down to 63. 63 is about a 61.8% retracement back to the V bottom. I like V bottoms to be retested, at least a proxy for it, a 61.8% retracement back to it. And one more thing to point out, if we make it through the first 15 minutes without actually retesting the V bottom or even a proxy for it, probably we're done with the down. Because the overnight and the intraday have a handoff during the first 15 minutes. And if the first 15 minutes haven't represented some sort of behavior that developed overnight, like the attraction to the V bottom, if that's not underway considerably, relevant under 61.8% retracement, or already being retested, that attraction dies. And the intraday takes over, and instead the market starts focusing on the vacuum back to yesterday's close. So I'll talk this through the open, but those are the influences and basically the relevant levels I'm focused on. Any questions? Be right back. So this doesn't change things. It just puts us in a different spot at the open, already having produced a bounce. So this is last minute optimism. Last minute optimism that is stealing the thunder and the vacuum that would otherwise propel from below and attract from above back to, or at least toward, the gap at yesterday's close. So we're also affecting the opening price. If the open now from yesterday's cash session close 95, if that gap, rather than being filled entirely, the proxy for it back to today's open is filled. Actually, that's coming in more like 88, 84, 88. We were talking about 80, 85 at the earlier low. Then we got up to 82, 86. Now we're really indicated to bounce a little bit more than that. But look how little is left on the table. So I am looking at a sell or an opportunity for a dip. I don't know that it gets down to 63, but there's that potential. All right, so the open is 81.50. Much narrower proxy gap range. We're already in a buy signal. So let's go ahead and identify the pullback limit, which is 81. If you are new here, and I'm sorry, it's now going to be 82. If you're new here, let me go ahead and describe a couple of things after I get this labeled. First of all, as you can see, the annotations are all on screen before price gets there. If price crosses an annotated line, a horizontal dash, basically, blue, red, green will be another one, then that level is left on screen. I might move it to get it out of the way, left or right, of future price action that may be obfuscating things, but that is there before price gets there, and it's left if price interacted with it. So, what are these? These solid blue line, the red, and you'll also see a green dash. These are inflection points. They're inflection points, and based on their color, they have different utilities. So this green line is irrelevant at the moment. A solid blue line with an arrow is maybe not entirely self-explanatory, but it'll be a buy or a sell signal. It'll generally look like this with the actual arrow drawn. And that's, again, an inflection point. The red line is a pullback limit. The green line is the same thing, a reaction limit. I call it a pullback limit in an up move and a bounce limit in a down move. You can use it. Different traders use it differently. If you want to use it as a stop, it can be probed. I would allow it to be probed by 3 or 4 ticks, just to be sure that it's actually being tested and not just noise. And even then, it may just be noise, just more of it. But we have to draw the line somewhere, no pun. Once it's probed, a signal, a buy or sell signal, a pullback limit or bounce limit, once it's probed by at least 3 or 4 ticks, 4 ticks during the first hour, once it's probed by that qualifier, 3 or 4 ticks, we start a countdown. Start a countdown of 3 or 4 minutes, 4 minutes during the first hour. That's the usual attention span of weak-handed counter-trend sponsorship. Weak-handed, meaning not the sponsorship that's making the prevailing trend happen, and counter-trend, so counter to that trend, and attention span. Now, maybe during that attention span, weak-handed counter-trend sponsorship is able to produce just a point or two of reaction or less, or multiple points beyond that in that time span. What's important is the time span, the attention span. And it's not just the counter-trend selling pressure in this case that's producing that pullback. It's stronger-handed buyers who are letting them do it. They're pausing. They're letting weak hands trap themselves. I have a calculation that I identify where that weak-handed, there's always going to be weak-handed, strong-handed buying and selling pressure at every tick. The question is, where does it start to be meaningful? And that's what this is intended to do, is identify those 3 or 4 minutes, the usual attention span of counter-trend sponsorship, but also of the trends sponsors allowing that to happen. And at 3 or 4 minutes, they're finished letting the counter-trend sponsorship have their fun, and they jump back in. So by the time we got to a 3 or 4 tick, and by the way, in these huge moves, if you want to give it, and I do, give it another couple, 3 ticks, not necessarily another couple, 3 minutes though. Attention span is attention span. But if you want to give it another couple, 3 ticks, that makes total sense in this environment. So let's say this is the 4th minute. It's a little close there. It's the open. First 15 minutes, the first 3 to 5 minutes, the noisiest of the first 15 minutes, which is even noisier, or the noisiest of the day. 4 minutes, let's call this the 4th minute, and just assess, look at how substantial that selling pressure is and how one way. This is very concerted. All 4 minutes don't have to be spent in decline. We could see a single minute qualify and then the rest of the time spent returning to the trend. And that's still the 4 minute window, 3 or 4 minute window. Right now we've got 4 minutes, and there, except for a couple ticks, a few ticks lower, and we want to give that a 1 or 2 or 3 point buffer, depending on the window, depending on the environment's range. That's the attention span. That should be it for sellers. If this trend intends to resume and extend, then that is the depth of the pullback, of the counter trend action. It's not that simple, but it's that simple to note. If we're able to get in anywhere close to that 4 minute low, 3 or 4 minute low, especially if all 3 or 4 minutes have been spent counter trending, that's a really good risk to reward. It doesn't get better than that. It doesn't make it any likelier to bounce. Being the usual attention span of counter trend sponsorship already does make it more likely to bounce, but not necessarily from that 4th minute right away, or not without other stuff happening. This one's playing out pretty perfectly. But the point is, this could have been on its way to collapsing like the overnight has. What's important is how close we are to the stop. And if we take the 4 minute low and give it a 2 or 3 point buffer, something that fits your own risk tolerance, but that's the range to work with. And the 4 minute low is 39.75, 3 points lower, 39.72, 73 or 72. And we can get in after that 4th minute, or when we have a degree of confidence where that 4th minute is. And we can get in or patiently await a little bit of weakness back toward that 4th minute low or the 4-minute periods low. We can be entered or be long in this case very close to where we'd know it's wrong to be long. That's much more important to be able to control the risk, how much risk we're taking on at entry. We can do that all day long if we have other relevant inputs, like that's the usual attention span of counter trend sponsorship, like we just completed a 61.8% retracement of yesterday's headline reaction, like there's a pattern that satisfied its selling pressure and already retraced, as I had identified earlier, retraced its inflection and was in a uptrend itself. All those things that they individually or combined, they point higher. So they don't always play out. And when they don't, it's especially helpful to have gotten long in anticipation of them playing out, but very close to the stop where we can limit our loss. But more often than not, if those indicators or those setups more often than not do play out, we can take that risk to reward all day long every time it shows. Got to be willing to take the risk, got to be prepared to take the risk. Don't even prepare to take the risk. Have a resting stop. Have a stop in. As soon as you get long, don't rely on reacting in time. Don't rely on reacting mentally. That stop has to be in, because the risk to reward quotient or equation has zero relevance if you're not willing and forcing yourself to take the risk when it appears. All right, let's update here. So pullback limit held its test. I'm only updating, not necessarily the trade right here. I'm updating the analysis of the strength of the trade, what we're expecting, what has happened. And where are we? What is this? This is the 38.2 and 61.8 retracement back to yesterday's cash session close. This is a proxy for yesterday's close. That is so 86.50 is the pullback limit now. The proxy gap, what was I saying when I labeled it? That's very difficult and unlikely to break through on its first 1 or 2 tries. The reaction down here is not surprising. It would have been surprising to just blow through it on that first try. More so with RSI diverging negatively. RSI was overbought on this high at the proxy gap. That made it likelier to be probed. But when the other end was touched, RSI was diverging negatively. That undermines the upside. A lot of moving parts here. That's why I talk it through. The more you hear it, and even more importantly, the more you are immersed in hearing it and seeing it in real time, the more it becomes second nature. All right, so we don't have any degree of confidence that we're going to get any higher this morning. We've just filled the gap to yesterday's close. How is that possible? If yesterday's close, cash session close at least, was $39.95, because this is a proxy for that gap. From yesterday's cash session close, $39.95, to today's opening print was $81.50. This is the 61.8% retracement. That is a proxy for the gap. Famed technician Walter Deemer says gaps are always filled. Fill the gap. Maybe not, and not with any timeliness, but we can count on the 61.8 being an attraction and being influential. All right, so any questions about any of that? We've covered a lot just now, from the pullback limit test to the anticipation that 61.8 is an attraction, and also that it was likely to be a repellent, at least initially. Now we have a new pullback limit. Wash, rinse, repeat. There's a pullback limit. It's being probed for 4 minutes. The usual attention span of counter trend sponsorship. Maybe it's something more substantial than that. It did just hold a retest, essentially, of the initial high, the earlier high. So maybe this is developing into something more substantial. But we have to have some filter, and I have to give the pullback a benefit of the doubt that it is at the whim of stronger-handed buyers who are pausing, basically refueling, letting weaker-handed sellers get out or get short. Everybody's attention span is going to lapse. Either those weaker-handed sellers are going to attract reinforcements that push through that 4-minute low, or they're done. Now, we're just 1, 2, 3, 4, depending on where we start our count. It's fungible whether you use the first bar that is also a high. In other words, the first bar that reverses. I prefer to use something separate from that. In this case, the immediately next bar. So that's 4 minutes now ending. High degree of confidence even before it ends that this is the 4-minute low at 77. We're 4 points off. And I want to have a stop. If I'm going to get long here, add to my long or re-enter. My stop, I have to give it a little bit of room. I have to give it 2 or 3 points of room. So call it 75 as a stop. I don't have to buy immediately at 4 minutes. I can throw a limit out there. A limit back down to 77, or in this case, it would be filled if we were looking under 77 or at 77. You don't usually get a complete retracement and then just pick up and resume the rally. That's not common. It happens. It's not unusual. It's just not common. And now we're really stretching the rubber band. It's either going to snap back up or this is breaking. So this also tells me how aggressive I can be on a sell signal. Can't be doing both. Can't be testing a pullback limit to a buy signal and triggering a sell signal with the same bar. So actually, I'm going to come in here with a sell signal that would trigger under 74. Everything was going so well. The market hasn't triggered its bias. It's certainly been through the first 15 minutes. What has it done during the first 15 minutes? It's maintained its break, no surprise, under the Globex's first hour. Having probed, as I described here, having probed the prior session's high overnight, especially when that's a trending session, second consecutive close that day, having probed the prior session's high overnight, exiting the open under Globex's first hour, the open being the first 15 minutes, 9:45. Exiting the open under 9:45 is a Globex flip. And that's bearish. Often it will dictate the morning's trend. We can get rid of these. Often it will dictate the morning's trend. Yesterday did that. Similar setup yesterday. Probing Wednesday night, probing intraday highs, but exiting the open under the Globex opens range. It was productive. Post-open, tested the bias down target. Even triggered by bias down. If not for the news, if not for the headlines, the bailout. Now this is going to happen. If you've got a sell stop one tick under the sell signal makes sense. It's triggered. You have to have a stop, immediately actionable, representing your own risk tolerance, because this can happen. I call this errant ticks or a sentiment extreme. Maybe it's a warning shot across the bow that's about to reverse down. You can always re-enter short. Control the risk. That is first and foremost. But we're now more than that buffer, deeper than that buffer under the 4-minute low. So maybe this is developing into something more substantial to the downside, or I'll be whipsawed out of a sell signal under 74, if I've even taken the sell signal. It hasn't even been pierced by at least 4 ticks. So as far as I know, it's really just being, now it is, really just being tested as by noise. It's an inflection point, like the red pullback limit or the green bounce limit when we use that. This may just be counter trend, weak-handed counter trend sponsorship at another inflection point. Strong-handed buyers waiting to pounce on them after they've given them a little window to trap themselves. Since we're under the bias down signal and the Globex flip already triggered, I'm giving sellers benefit of the doubt when I can. I haven't even addressed yet, because we can't address everything in a fast-moving market. But just as the 61.8 proxy gap was likely to hold, so if you were long, good spot to consider selling or at least tightening stops, or even fading it, selling it. Same thing could be considered here if we weren't in a bearish Globex flip setup already. You could even consider buying this test. It may still work out. I would certainly key a buy. We will. I'll show you how. I'll be keying a buy signal off of this inflection point. So just as it's an inflection point, these are inflection points. They have different utilities depending on where they, what their context is. But we still need to see the 4-minute low probed to know that reinforcements have arrived. So some traders are going to be patient and they're going to wait for that 4-minute low, or 3 minutes after the first hour. They're going to wait for that 3-minute low or 4-minute low to be established. Or watch for detouring, counter trend detouring. See what kind of range can be established around this inflection point. Once it's probed by 3 or 4 ticks, the countdown is on. And you can't be testing the sell signal and triggering a buy signal with the same bars. And right now we're testing the sell signal. How you execute is up to you. And I'll describe different strategies that may resonate differently with different traders. Clearly, there's something important going on here. We have news coming at 10, high-profile news, reliably influential to price action. So, good question. Does the first 15 minutes today qualify as trending down on expiration, which is another setup? It doesn't. We've got a high, pullback, higher high, and then a lower low, or at least back to the low by 9:45, so it doesn't. But it's an interesting setup when it develops on expiration. If the first 15 minutes trends, that tends to extrapolate out for the day, but that setup isn't in play today. All right, so it's been 4 minutes since probing under the sell signal, establishing a 4-minute low at 71.50. Anything lower is reinforcements, or 71.75. Anything lower is reinforcements, and we'd expect it to behave that way. Meanwhile, the 4-minute detour since that countdown began is also done, and that's gotten up to 79.50. So this entire, let's call it 71.50 to 79.50 range, is testing the sell signal. So if that's the 4-minute high, as close as a short can be entered to that high, when we know a couple, 3 points higher is outside the room, outside the buffer, that can still be considered as testing this sell signal. That's a relevant price point. I've done the heavy lifting to identify the relevant price point. That starts the countdown. Rolex or Timex does that heavy lifting to do the countdown. And we're establishing a range of testing the sell signal. They're not always going to be like this. They may develop pretty quickly. Here's a buy signal that was sliced through. Another buy signal that was sliced through, returned to it. But the 4th minute in the detouring was at the upper end of that 4-minute time frame. Doesn't make it any likelier to resolve down. It just lets us get in there at a more attractive price. And what defines attractive? Not being any likelier to play out profitably, but being that much closer to where we'd know to cut our loss. And even if we cut our loss, even if this extends too high and we have to cut our loss, it doesn't mean the trade won't reinstate. We do a lot of work identifying these levels. Price action might throw us a curve now and then and get us out of that position we took in anticipation of all that work paying off, but without invalidating the setup, being only noise. So we want to be sure to get back in. May seem like a lot of extra work, but it's worth it because we have to keep an eye on the risk, limit the risk. So I've got a 3-minute high at 79.50 or 4-minute high. Anything higher is then in the process of invalidating the sell signal, no longer testing it. I'm going to give it a little bit of room for noise up here to 81.50. And back above 81.50. Maybe I'll get whipsawed out of that, but there will be a setup underway that I'm going to give a benefit of the doubt to until told otherwise. All right, any questions, please ask. Let's talk about these red and green lines on the left 3-minute chart. This is a 3-minute ES and a 1-minute ES. So these red and green lines are the bias parameters. And they are relevant resistance, support. At any time, they are calculated from price action, from patterns that developed through yesterday's close. They're published at yesterday's close. And they can be influential overnight, through the open. But what's really important is at 10:15, the internal green and red lines, the signals, the external red and green lines, their targets. What's really important is at 10:15, was the test of one of these held or rejected? Or maintained, I'm sorry. So for instance, this is going to freeze price action. Here's the bias down signal. It's been probed. Ignore that this line happens to be green. Probed, the bias down target's been tested, in fact. But at 10:15, what will matter is price back above it or still below it? If it's below it, it puts into play a retest of the target. Or a test if it hasn't been tested yet, a test of the target. Bias down will have triggered at 10:15. If the test is maintained, recovered that is, isolated, then an offsetting test of the bias up signal would be in play. In other words, these signal lines are so relevant that at 10:15, when the market has settled out what it intends to do today, or at least for the morning, if it has held a test of the bias down signal, if it has probed it and at 10:15 isolated all that selling pressure back above it, the reward for those sellers is an offsetting test of the bias up signal. If the bias down signal at 10:15 looks like this, we're under the signal, then the bias down target would be put into play. Those are requirements, by the way, that those levels be met. The no bias is what I would label having recovered the bias down. If the bias down signal, now keep in mind, this only matters if the bias down signal is probed. You have to actually isolate sellers. You have to actually trap them. They're the ones that are fueling the reversal back to the opposite signal. So if the bias down signal is tested and recovered at 10:15, putting into play the offsetting test, look at how much room there is. Sometimes we'll already be on our way by then, by 10:15. But if at the last minute here, the bias down signal is recovered, that will put into play the offsetting test way up here. If this is what it looks like at 10:15, 39.76, and the bias down target is 68, well, that's great, and it's pretty reliable. Even if it were a direct path there, I'd much rather have the no bias. No bias may be a little deceptive in its label because it's attracted back to the opposite. That's the reward that buyers get for absorbing these sellers through 10:15. All right, so now the buy signal is in play. We're stopped out. Should be. This is too far removed from the test of this sell signal. I leave that labeled so I can, at a glance, note that a relevant level was being tested here and failed. It never extended deeper than its first 3 or 4 minutes, so that's still a valid inflection point. Had this attracted reinforcements under its 3 or 4 minute low, then this would not be reusable as an inflection. And I'm sorry, something else to point out, of course, is this is a knee-jerk reaction to a headline. Being a knee-jerk reaction to a headline, the first 60 to 90 seconds is just weak hands. Weak hands, 60, 90 seconds. At the end of that minute and a half window, that's the only price that'll matter. Now, if you want to have an actionable buy signal resting into that news, that's based on your own style. Is that what you want to do? Then do it. You can wait patiently. Knee-jerk reaction to news very often is going to be retraced by at least 61.8% at some point, or 38.2 to 61.8%. Actually, one or the other. So here's that first 90 seconds. It got all the way up here. The 61.8% retracement is 82.50. If you want to be long that buy signal, you don't have to chase it. Maybe that won't, maybe the pattern won't pull back. Maybe it will finally get back to rallying. But it also makes sense in that, since that's a headline reaction, if you want to get long it anytime soon, but not rush, 82.50 pullback, often that'll be met. Not always. Sometimes you have to let the bigger ones go. Does it make sense to just chase the knee-jerk, weak-handed reaction and try and get long close to where that weak-handed crowd pushed price? Probably not. That doesn't prevent it from extending without any reasonable pullback and missing that long, but that's just good business practice. In fact, we had a 38.2 retrace here. that can stand. All we had yesterday during yesterday's rally were 38.2% retracements, and they weren't even entirely 38.2 retracements. And the rally extended and extended on the headline of the bailout. So, since we aren't probing a buy signal, regardless of what anybody and everybody's different actions or patience, degrees of patience and actionability are with that signal, I'm still going to track its pullback limit. By the way, there we are back at the 61.8. RSIs are improving this time, by the way. They're not diverging negatively as with the first test. Much greater likelihood of extending through the 61.8% retracement. And by the way, now that's pretty much moot. Pullback limit is 88. Wash, rinse, repeat. And have a fire extinguisher handy in case you missed, and instead of grabbing the shampoo, you grabbed gasoline. We've all been there. Okay, pullback limit hasn't been touched. Now it's been touched and pierced by at least 4 ticks, so we start the countdown. All 4 minutes of that countdown don't need to be spent under the pullback limit. They don't have to be spent ticking relentlessly lower and lower. The last 2 pullback limits did. When we know where the 4-minute low is, when we have a degree of confidence where the 4-minute low is going to have been, we'll use that to consider that against the potential reward. What's the risk? If this is the 4-minute low right here at 85 and we can get in anywhere, well, regardless of where we can get in, a 2 or 3 point buffer under that is 82, 83. Say we set a stop at 82. Let's not even worry what that is equal to in risk. That's just where our stop would be, 82. What's the reward? That's the risk for risk reward. What's the reward? Well, if the bias down signal holds its test, its recovery through 10:15, the reward is an offsetting test of the bias up signal, 40.05. None of that answers the question of risk and reward versus or what our trade's risk to reward would be. That's just how deep the risk would get and how high the reward would get, presumably. Nothing is assured. Even the risk isn't assured. Fast market could slice right through and not give us anything close to our price. So we have total control over the entry. If we know we want to limit our risk to the reward, then we want to enter closer to where that risk is. The risk is 82, so if I can throw a limit order out there, we're still in the first 4 minutes and actually probing a little bit lower, so that's a moving target, so to speak. I'm not interested at this moment because we're just not even 3 minutes through the 4 minutes allowed. And we're sitting at the lower end, so that 4th minute could be even lower. And here, look at that. Now in the 4th minute, sitting at the low, so we can't. If we were bouncing more, we'd be able to have a degree of confidence that we've seen the 4-minute low, this being the 4th minute, but we're so close to the low, maybe it prints lower. But the trade-off for that 4-minute low degree of confidence, or lack of confidence right now, since we're so close to it, is at least we're going to be that much closer, it looks like. When those 4 minutes have elapsed, we'll be that much closer to the risk. So I was speaking hypothetically, had that been the 4-minute low. But here we are with a 4-minute low coming in so far at about 81. It is 81. So 2 or 3 points lower is 78, 79. Let's say my stop is going to be 78. My potential reward, 40.05. Is that better than a 1 to 2 risk to reward, which is my minimum risk to reward to make it attractive? It's pretty past that point. If I want a 10 to 1 or a 1 to 10 risk to reward, I'm going to negotiate a better entry than that. This is already blowing through that limit. So what I've been describing so far is just the basic. Everything has an exception or a tweak. Let's talk about this one. 4 minutes, counter trend detouring back under the pullback limit. Got down to, call it 81, and then immediately probed lower. Ignoring the current bar, that bar, the 5th minute bar that probed lower, was still overlapping the 4th minute. And so long as it is, I'm willing to entertain that it's, we're not actually able, believe it or not, to contain counter trend sponsorships attention span all the time. I know. Tough to believe. But anyway, if this were to snap back up, I'm not going to buy that necessarily. I mean, it is coming back into an interesting support. There's a lot of congestion here. So to have expended all this selling pressure relentlessly to return all the way down to this congestion, that's probably not going to give way right away. Seems a little aggressive. It's not a reason to buy the falling knife, but a reason to maybe stake out a buy stop. That 4th minute low or 4-minute low is about 81. If we could get back above 81, back above 81, 84, 86, these are levels that I need to see. Now, this sell signal, you might want to dismiss at the moment. It's pretty far removed. Now, that's definitely a relevant level, but I don't really want to be taking a sell signal that is triggered by the first reaction down from the previous trend's extreme. Usually those legs like this has a horrible track record for triggering a signal. Still being in, the Globex flip that triggered, still being vulnerable to triggering bias down as well. the first reaction down from the previous trend's extreme having extended down relentlessly, I still want to, or don't want to necessarily take a signal that's triggered by that leg. I'd like to see it retraced by usually 61.8%. I mean, back up here to 84 area. And then I would look at a sell signal triggered by the next leg. Distinguish a second down leg from just this reaction down from the previous trend's extreme. Notice RSI never got overbought. So usually these legs are going to be retraced by 61.8%. Usually these legs aren't so relentless and productive. So usually a 61.8% retracement of the first reaction down from the previous trend's extreme isn't really that much or tradable. This one is that much. In other words, there's enough room up here, and I'm just dismissing the errant ticks to find the 61.8% retracement. There's enough potential or room, if this is the low, to retrace 61.8%. This would be my reward. That I'm interested. I mean, we're so far removed from it. Is there a long entry that makes sense? And there is, back above 77. And maybe that develops into something else. It's 10:15 right now, so the bias down has clearly triggered. That happens to be right at the 83 bias down signal, so maybe we tag up. Tag up and then resolve down. Don't have to take the setup, but it's good to know what the market has in mind here. Could be correcting back to the bias down signal that has just triggered. You can retest resistance a lot, which is also a 61.8 retracement of this relentless first reaction down from the previous trend's extreme, which is usually at some point going to be corrected by 61.8%. Before I take a sell signal off of this leg, I'd like at least a 38.2% correction of it, which would mean I'm going to be whipsawed out of this buy signal. And finally, now that, and I'm sorry, into this congestion, all this congestion being met from a fresh high. That congestion was initially productive. It produced a fresh high. It resolved back to and through the origin of the dip that created that congestion. Probably not, just a principle, probably not going to just slice right through it. We are back in it, so it's now also, another principle, difficult to get back out of it. But there's a reason to anticipate that, and that is the usual 61.8% retracement of the first reaction from the previous trend's extreme. Adding a sell signal at 71. Triggered under 71, or at least the countdown starts once it's been pierced by at least 3 ticks once we get past the bottom of the hour. Now we can't be doing both. We actually, the sell signal is disqualified right now from triggering. We're in the process of testing, giving 3 or 4 minutes of fluctuation around the buy signal. Can't be doing both. Can't be testing a buy signal and triggering a sell signal. And I don't just mean operationally, we can't have a buy and a sell trade on simultaneously. It is that the market, I'm trying to assess what the market's mood is, what its mentality is. And if I allow it 4 minutes of testing either direction, the buy signal, then this has to be in that window of testing the buy signal. It's right at the end of it, so if you want to give it a benefit of the doubt, you can do that. We're also right at the end of the first hour where we go from 4 minutes to 3 minutes. But just know what the limitations are. We did get to a 38.2% retracement, so I can give the sell signal a benefit of the doubt. Really tough to give buyers any benefit of the doubt now. That 38.2% retracement, having qualified now by returning to and through the origin of the bounce. Let me clean this up a little. Having returned to and through the origin of the bounce. And the timeliness of it, satisfying the bias down target that was triggered, and the bearish Globex flip that had already signaled at 9:45. This buy signal wasn't probed any higher than its first 3 or 4 minutes, so that is still a valid signal if it's recovered during a window that it's qualified to trigger. Having extended a little deeper, I wouldn't expect just 83.50 to be the peak, but I still want to leave it identified. So do you see this dip right here? Counter trend resolves up, corrective dip in this case. That 61.8% retracement of it down to 64. Once we get into that dip, into its range, it's not assured, but that's a likely spot to touch is 64. Whatever its resolution. So we've talked about isolating. We just isolated this test. Well, here, let's point out what could have been isolated. Through 10:15, all the testing under the bias down signal could have been isolated by recovering the bias down signal. It wasn't. Now, the bias down target is met, but it's still a bias down window. The bias is still down. So we do see that a lot of selling pressure has been satisfied at the bias down target. And that may hold for the morning. Not very likely on expiration that we just sit still after having been so volatile. So there's that attraction. Still biased down. So nothing prevents extending, or I'm sorry, nothing precludes being able to extend down, but the requirement is done. Anything lower is a function of the other inputs outstanding, like the bearish Globex flip. It is still biased down. The window that sellers had available to them, or that buyers had available to isolate sellers, they couldn't make it happen. So sellers have control this morning. So that's isolation. There's another principle I call orbit, being in the orbit of some prior extreme, not the overnight. The overnight patterns, whatever they were going to have put into play, or whatever their principles or properties that needed to be influential post-open, needed to be in play through the first, or as of the first 15 minutes. Now, had we opened in the orbit, that is the prior high of this V bottom, its retest would have been likely, or required almost. But when we opened, we were out of that range, so that didn't play. So retesting it isn't going to be that relevant. This is going to be the first intraday 61.8% retracement of yesterday's headline reaction. All right, the bounce limit is 62. This thicker green line is exactly the same as the thicker red line. It's just used as a bounce limit with a ongoing sell signal, as opposed to the red line being a pullback limit. So, as I said, I can't describe everything. In every situation, there's a lot of moving parts. But just to point out some other stuff. You know, these, if you've noticed, these lines, they're inflection points. What's the purpose of an inflection? It's to at least tell us something relevant is happening. But as a strategy, the inflection point, temporarily or not, should be immediately productive by several points. Bounce limit is 58. As I said earlier, all these lines are on the screen before price gets there. If price interacts with it, it stays. If I move it, it's just because it's in the way of seeing things clearly. But I don't change the prices. Bounce limit is actually 57.50 now. So I'm moving this bounce limit because it was never touched. Price says extended down, so there's a new value here. 57.50 is the bounce limit. So if we have a high degree of confidence that inflection points, not always, but a lot of the time, are going to be immediately productive, and even if they're immediately productive, that's potentially only temporary. If you scalp, if you like to scalp, that can be a useful tool. with a reasonable risk to reward. All right, let's see some questions here. Globex flip is still intact, bearish. And by the way, these setups, as they trigger, can inform behaviors, can inform actions. In a bias down, are bounces possible? Sure. The bias down, you can see the timeline under the chart lists the timing windows, the fixed timing windows. We're now in the bias window, morning bias window, 10:15 to 11:30. So we're anticipating that bounces will fail. On a Friday, in fact, we're going even further. Friday, because of the 2 days of impending illiquidity, there's a group of different setups I call Friday factors that are because of the impending illiquidity for the 2-day weekend. And so the morning's bias on Fridays tends to persist actually through the noon hour, so beyond 11:30 to 1. So this bias down could be even more productive. Those are fixed timing windows listed under the chart. Dynamic, these are dynamic timing windows. Anything that is triggered on the fly, any timing window that opens up for like 3 or 4 minutes because price action did something, that's a dynamic window. So we retested the 61.8% retracement back to, of yesterday's headline reaction. Natural support there. 1 minute RSI got oversold. 3 minute RSI barely on the cusp of being oversold. But we're now testing the bounce limit. The bounce limit, the usual attention span of counter trend sponsorship, we're in a bias down window. What do you think is going to happen to bounces? Or at least, what is the bias down? I may have given it away. What is the bias down suggesting will happen to bounces? It is suggesting that they'll fail. So if we can get comfortable where the 3 minute high is, where's the 3 minute high, the minimum 3-tick 3 minute high to testing the bounce limit? In fact, all 3 minutes were above the bounce limit and they made successfully higher highs. 3 minute high is 62, 39.62. 2 or 3 point buffer up to 65. Let's be extreme here. That's our stop, 65 if we're going to be short. And what's the reward? Well, we've got a morning, at least another hour of bias down ahead of us. Yeah, we're sitting at the extreme. But let's get rid of the overnight. If we're going to break to anything lower, there's a lot of room under that downtrend channel. I'm going to retrofit this a little bit. But I've got an objective, any fresh low, my next objective is basically 47. Potentially 29, 28, 29. So if my stop is 65, now I'm further away from it. I could put a limit order in at 60 and have a 5 point stop. I could put a limit order in at 61 if I only want a 4-point stop. If that's the number I need on the risk component in order for the potential reward, the risk to reward, to qualify for my trading plan minimum, then that's what I have to do. And if I miss it, I miss it. If it doesn't qualify for my trading plan minimum, it doesn't. Or I could have been more timely and gotten a trade-off, a short, closer to that 3-minute high. But in any case, my stop is 65. Let's say I get filled or got filled at 61. That's a 4-point stop. My trading plan says I need a minimum 3-to-1 or 1-to-3 risk to reward. So my 4-point stop, am I looking for 12 points profit off of 61? Well, I just defined the next target being 47. Off of 61, that's a 14-point profit. That's better than a 1-to-3 risk to reward. And we've got an environment that is likelier to extend down, being a bias down window. Question about 7 a.m. call that maybe we could get 100 points down today if we could produce 100 points up. I didn't say that. I said that if buyers retained control through the open, we could exceed the 100 points, duplicate the 100 points, and then some to the upside. But I didn't have any number on the downside. Not a complete retracement necessarily. Not that there can't be, but that was not something. So there's 47. And if 47 doesn't hold, my next lower objective is 39, 28, 29. But even if I knew with 100% certainty that 47 were not going to hold, ultimately, I do know that there's a lot of selling pressure based on the Fibonacci projection, that there's a lot of selling pressure to be or being satisfied there. So it's likely to produce some sort of a bounce. And even that may not happen. Just dealing in degrees of likelihood here. Bounce limit is 39.50.50. So you don't have to be long or short right now. You don't have to be long, but you don't have to be short. You could have written this down to the likely target. Can re-enter short, lower. If you're willing to take risk up to 50-50, that means that off of the 47 target, you're willing to take 3.5, 4 points, give 3.5, 4 points back. Well, instead of potentially sitting through that and literally giving that back, you can just take the 47 target where you know there's a high degree of likelihood of a bounce, no matter its resolution. Maybe it's not such a bounce that it actually triggers or would have triggered the stop. But a re-entry a couple points lower, at that point, that would be a more expensive position than the one that was discarded at 47. But at a cheaper price than to have given back 4 points instead of re-entering 2 points under the target that was sold. Also, there's the stop. So, wash, rinse, repeat, giving the bounce limit 3 minutes to be probed. They don't all all 3 minutes don't have to be spent above the bounce limit. But once one of those bars probes the bounce limit by at least 3 ticks, the countdown is on. And we have a high degree of likelihood of resolving down, maybe a lesser likelihood having met 47, that even if this intends, if we knew with 100% certainty it intends to resolve down, there is going to have to be some sort of a distribution pattern, more backing and filling perhaps, because that was a target. And what do we have here? We have a bounce in the context of a trend. And we're piercing it. So there's actually almost a target, or at least natural resistance in here. Backing out the errant ticks. Natural resistance in here at 58.50. If that's not a bottom, and it's a bias down environment that on Friday is going to tend to persist through the noon hour, and we're barely into the bias window. If I can get 58.50, if I can enter short 58.50, that's going to be pretty attractive. Maybe it's whipsawed right out by a bigger bounce. That's business. What I want to do is at least get in good. So I don't know that I'm going to get that big of a bounce. That doesn't have to be fulfilled. In fact, there's the 3-minute high. 3-minute high at 55.50. If this does some more work here, if it actually violates the bounce limit by trading above its 3-minute high, but not a bad spot to enter anyway. What I'm not looking at in this context at this time is longs. I'll need to see some kind of a bottoming pattern. Even if I knew with 100% certainty that the bottom is forming, even if I knew that, see these lower lows and lower highs? I can't buy that. I've got to see some complexity, not the textbook definition of trending, lower lows, lower highs. But get some higher highs in here, or a higher high, and to pull back, form a pattern, a recognizable pattern. Notice what happened at the 3-minute high to testing the bounce limit. Vulnerability to reversing down. Just back down to 47.25. So haven't established that the trend is extending, but you can see those principles and those properties and those likely behaviors playing out regardless. All right, so again, any questions, please ask. I'm going to get this into the blog. I'm sorry, there was a question about bonds earlier. They traded above 132. Does it close above 132? Take 127-ish off the table. Pretty much. Oh, I'm sorry, 132. This is my resistance for the bounce. There's a lot of area in here that's just noise back to the high. This pivotal high, the high prior to the actual high, I didn't mean to say 132. 132, no. 133, yes. Close above 133, and this is off the table. Until higher highs, at least. So not 132, 133 is the line in the sand. Preferably, though, that being the room for noise here, it's not even tested. Just this fluctuation around 132. Looks like a big flight to safety, by the way, for bonds. That's offering an interesting setup in copper. So we've got this ongoing pullback and this extended downtrend support that's been influential. A little overthrown to get to the 261.8 projection of my topping pattern. So definitely responding. Lower prior highs in here that you really don't want to see too much time spent there before resolving up. So this is giving an interesting opportunity if in fact that's mounting another bounce. This pullback is giving us an opportunity testing these short-term lower prior highs. Really don't want to see that get carried away to the downside. And at this point, back above 393, 394. Oh, let's call it 395. So back above 395 at this point in the very near term, whether going into or coming out of the weekend. That would be the beginnings of a reversal potentially. And Bitcoin, again, my take on Bitcoin is it's no longer in the same category of risk on as ES. It is now totally a creature of safety. And there's a big perception of that. Not even, I mean, it's more akin to bonds, to treasuries. The joke over the last couple of years, over the last year was, at least last year, of inflation. Hey, I predicted inflation right when it was going to happen, as it was happening, and it is doing exactly what I thought it was going to do. So you made a fortune, right? No, I put it all in Bitcoin and gold. So they are not, at least Bitcoin, not an anti-inflation machine. Anti-collapse. Okay, so 3-minute high. 3-minute high held. Resolved down, usual attention span of counter trend sponsorship. Just trending right through 47. Next target is 28.29. The question on the 100 points, again, you're asking. You didn't hear the answer. Why don't you go find that quote for me if you could, and I can address that. I don't recall saying that because I don't have an opinion on that. I did address the upside, that if the open could absorb the selling that we were seeing at 7 o'clock, if we didn't trigger a bearish Globex flip, for instance, we could outdo yesterday's 100-point rally to the upside. But yesterday's rally can be partially corrected, fully corrected, reversed. There's no limitation or requirement for that. So I am curious what I was saying that sounded differently. Here's another bounce. So room up to 52. We never got high enough for that to trigger. So new bounce limit is 45. $45 is being probed. Three minutes. This may be a double bottom. Look at RSI diverging positively on 3-minute RSI and at least making a higher oversold low on 1 minute. Big burden of proof on sellers. So no matter where I draw or identify the bounce limit or describe the risk for the risk reward purposes, your stop should always reflect your risk tolerance. On that quote, I don't know what else to say without hearing or seeing the actual quote, because I don't recall saying that, and none of that is in my analysis anyway. So I don't know where that would have come from. We certainly, as I just said, we can move up, we can move to a back down to a percentage of yesterday's rally. We can retrace it all. We can even reverse it. There's nothing about yesterday's rally that says it can be retraced by 100 points, and that's what I would focus on. There's nothing about that. I did, and I wonder if this is the confusion, I did specifically say this morning that if this pullback that was underway could be absorbed, all the bearish stuff that was being thrown at the market and hadn't yet exceeded a timing window, hadn't outlasted a timing window, if the market could have absorbed it, then I would have absolutely have expected a rally rivaling or exceeding yesterday's. All right, 3-minute high to testing the bounce limit. So if you're following that strategy, if you're looking to ladder in or scale in again or back in, that is a really attractive short entry because it is so close to where we know it's wrong to be short. Another 2 or 3 points above 51.50, 52. Doesn't make it any likelier to play out to the downside. It's maybe a little less likely because 47 has been tested and retested on RSIs, making higher lows, if not actually diverging positively. That's not a buy signal. It's a call for reinforcements when RSIs diverge positively. Sellers are asking for reinforcements to push price back down so that it can drag RSIs back into oversold before their interim high is tested. That's 39.55.50. Meanwhile, there's the 61.8% retracement of that bounce. So I really don't want to be short above there. It's possible to probe it a little bit and still resolve down. So if we started probing above 52, well, I wouldn't want to be short. I'd want to have a sell stop working back under this area, back under 49, 48. That'll get me back in if, in fact, that excess was rejected. A lot of stuff pointing to this as being resistance, though, at least. All right. Any other questions? Keep them coming. Another 3-minute high that holds. That actually at the end of those 3 minutes we were very close to the high, a really good risk to reward to sell. with the added knowledge that was a 61.8 retracement of the last bounce. Had to ignore or decide to take the extra risk in that RSIs had diverged positively off the last low. So you definitely would have wanted to stop. But if you're going to follow that strategy, there's a great case in point for doing it, for just basically blindly following that strategy with stops. Doesn't mean we're going to resolve down. Maybe because of the trade being entered or being responded to, the 3-minute high, the 61.8 retrace, being productive, because that's in the context of testing 47, the target that we had identified. RSI is diverging positively or improving. Maybe use it to scalp. All right, so any questions, please ask. I'll be right back. All right, well, this sure looks like a continuation pattern, a flag. So this would, even though it's not a fresh low yet, that is a breakout. And of course, what's more important than breaking a trend line? Breaking its last touch. Now it is a fresh low. RSIs are diverging positively. The interim high to the last positive divergence was never exceeded. So we're kind of living on borrowed time. It's not that it ever has to be recovered, that the positive divergence can't continue positively diverging indefinitely, just not infinitely. So be aware that bounces are more vulnerable now. The bounce limit is again 45. Same bounce limit, but the prior tests of it are irrelevant. With the new low, we're looking for a new 3-minute high to testing the bounce limit, the very same bounce limit. These don't matter. The flag is busted, or it is taking a rogue leg. There's another bounce, 61.8% being pierced. It's not deal killer for a continuation pattern to be retraced, but usually that's not going to be retraced more than 61 or more than 50% back into the pattern, and this is. So, good opportunity for a corrective bounce, but a corrective bounce could be several points. It could be several dozen points. We just don't have a requirement to be anything more than a pause. So kind of tough to look at a signal. I will also point out all this overlap here, short of that last relative high. This is a sleeper high that is resistance. If I'm going to, I'm just going to keep labeling. That's my job. Whether anybody takes the signal, whether it's worth taking or not, it at least tracks what the market is doing, what sponsorship is trying to do, has left to do, failed to do. We're going to keep an eye on that because that's where our signals come from. And I do have an inflection here. I'm not sure I want to take it. I'm pretty sure I don't want to take it. Above 58.75, signaling a bigger bounce underway. Meanwhile, I'm anticipating that this 3-minute high at least has an opportunity to resume the decline, but it's right at its cut point. So the RSI positive divergences at the low, continually overlapping, returning to 47 despite probing it repeatedly, have turned into somewhat of a inverted head and shoulders. But we already knew that the downside was its risk was lapsing, or the attraction lower, the momentum lower had already begun lapsing or being jeopardized with the 3-minute high being exceeded. There's a sleeper low in here being overlapped. There's a 61.8 retracement back to the prior high now being attacked. Unless there's a pullback here that lets me consider a lower buy signal, I've got to see this probed. It's not attractive. It's not that attractive of a signal, and there's no requirement to take it. And we're still in a bias window that is likely to persist, bias down likely to persist through the noon hour. Normally, Monday through Thursday, this is when the bias window would start lapsing. Normally, if we saw this behavior Monday through Thursday, this exact pattern, I'd be very eager to buy this. I would be buying it back above the 3-minute high here, back above the bounce limit violation. A couple 3 points higher, say 55, I'd be in long. Because the bias down window was within view of lapsing. Starts lapsing at 11:30. We're within 10 or 15 minutes. It's within view of lapsing. That's the normal behavior, but on Fridays, Friday factors make the morning's bias tend to persist through the noon hour. So I'm actually going to try to find a spot to sell this, so long as it doesn't trigger the buy signal. Which it shouldn't. It's likely or unlikely to trigger the buy signal because this is usually on Fridays still biased down through the noon hour. Bounces are likely to fail. And that's the line in the sand that would make the difference between noise and a bounce. Bigger bounce. But the level's here, and I'll continue to track. If the buy signal triggers, if it's probed, I will track pullback limits. If that's somebody's style and they want to take that counter trend leg, or if your own analysis suggests that, I'll support that with more information. So even if we know, not necessarily, even if we knew with 100% certainty that downside momentum was lapsing, if we don't have a pattern that points higher, if we don't have a timing window that allows trending higher, not that a big bounce can't fork its way in there, then what's the point of taking it? Just distracting oneself to pay attention and nurse a wounded long when we want to be prepared for something like this, resuming the decline, which is what the signals look for or anticipated. So next target in play is 39.2829. Bounce limit is 41. By the way, the more so that the next low is likelier to be the low, that is, the likelier that 2829 is going to be the bottom, whether it reverses up or not. Also, the likelier that it's going to be choppy on the way down, not as relentlessly pessimistic. All right, don't forget this free stream, the free YouTube room. I do it sporadically, purposely, sporadically, and purposefully to give you a glimpse, let you see what's out there. See if this is something you'd want to try on a trial basis, free trial basis. If you go to viditrade.com, you can sign up for a free trial. I suggest taking the one with the vidiROOM. That's what this is, vidiROOM. Which is normally a $200 upcharge, but per 4-week term. But first of all, you get that and email alert updates that have all this stuff textually. You get that for free for a week, and then if you were new, you don't pay for the room. You get access to it, but you don't pay for it for the first term. Just really, even if you just stick with the blog updates, really enhances your learning curve and your understanding, and that's the whole point. Not trying to catch every move. I am trying to, of course, be on top of the moves that my signals and setups, many that you won't find elsewhere, are anticipating. And while describing them, give you an understanding of things in the market, influences and behaviors that are actually pretty predictable, essentially based on the timing windows. So good opportunity to ask questions as well, but I hope to see you soon. If you want the vidiROOM, this experience all day and every day, along with plenty of other stuff, go to viditrade.com, grab a free trial. This room will be closing by noon. All right. A little bit of a bounce here. We'll look at another sell signal. This room will be closing by noon. Thank you very much. Regardless of what you do, I really appreciate your taking a look at what I do. Once again, thanks everyone for joining me. And don't forget to go to viditrade.com and take out a free trial. I would do it today. That way you'll be included in tomorrow's Saturday review, which is 9:30 in the vidiROOM. Big picture overview, stock requests, instant on-demand chart analysis by request. Whatever you do, have a great weekend. Take care.